Hello, everyone out there in podcast world. Hope you're having a great day. You're listening to or watching the Service Business Mastery podcast. I'm one of your hosts, Tersh Blissett, sitting virtually next to my co-host, Joshua Crouch. It's been a hot minute since we've gone live during the summer months. We typically will take a break because Service Emperor, my HVAC company, is usually pretty busy, and it is busy. But I have a great team now that's really allowing me to do this while they are busy. So that's really cool. So, but we normally don't record a lot during the summer because also we have a lot of content that we gather during the wintertime at the expo shows and stuff. So, but
the hope is one day we capture 52 weeks of content without having to spend every Wednesday doing it. That's the dream, right? That's a dream we all live. We all want everything to happen and not have to do any work later.
Yeah, well, not that we don't want to hang out with everybody live streaming on Wednesdays, but it's definitely one of those things where, like, we automate. We have an automation company. We want to be able to build these things out, and 6 months later, they're still going without our, constant need of attention. So, but yes, we do love hanging out with everyone on a Wednesday and live streaming with you. So if you do have any questions, don't hesitate to ask in the comment section. But whenever we were talking to Mr. Thomas, heck, it's been a while since I first met Thomas Murphy. We were like, we're going to have him on during the summer because otherwise it's going to be late winter before we can have him on. And this is a conversation that I feel like, and maybe I'm wrong, Josh, but this is a conversation that I feel like contractors need to hear about. And we're going to talk money. We're going to talk finances and getting people financed when they have difficult credit challenges sometimes. And so we're going to ask Thomas about that. He is what was it that
he called himself the turnaround, or I'm sorry, not himself, IHCS Finance, the turnaround experts, which I love. I love that tagline. It's great.
Yeah. So a few episodes
so essentially
back,
they specialize in obviously they can approve really good high quality credit scores, but they specialize in getting those ones approved that are not high quality, which we're running into that a lot more in the space, right? Like, money's gotten tight. People don't have the available cash. They want to try to finance something, and then turndowns. That's like the most frustrating thing in the sales process. You get the yes, the hardest part. You get the yes.
Oh yeah.
And then the finance piece is it's like, okay, just paperwork, right? It's just logistics. And then you get a turn down and you're like, it kind of ruins your freaking day. Like, so having someone that can fight for you on maybe seeing if there is a way to get this person approved with the system that they already said yes to. We've heard some really great things about Thomas and his company.
Yeah, 100%. With that being said, I'd like to go ahead and bring Thomas on board here. Welcome to the show, Thomas.
Hello, how are you?
He wasn't paying attention like I wasn't paying attention when you started. I was writing something on the side.
That is my goal in life, is to just catch you in an awkward moment. How are you, Thomas?
I'm doing real fine. Thank you for having me today. I appreciate
it. Absolutely. It's our pleasure. So really quick, can you give like your background, your history, why we should be listening to you? Like what makes you the expert?
All righty. Well, I grew up in the retail furniture space, and then later went on to manage a jewelry store while I was going to college. And then from there, I got into the rent-own industry, like Aaron's or Rent-A-Center, where they're dealing with credit-challenged customers. That's an important part. And then so from there, I had a sales and marketing company that I marketed to wherever there was a time payment going involved, like a finance office or a credit furniture store or a rent-own company. And then in 2008, I started my own leased-own company, which is basically worked with companies like Ashley Furniture Home Store. So the customer would come in for the 5-year no interest President's Day sale and then get turned down. And they say, my wife's over there on the couch picking out curtains mentally in her head. I got to have a sofa today. Well, we have this thing called YouOwn, and that if you have a checking account and a photo ID and what have you, basically we bought the product at full retail from the retailer. like Ashley Furniture Home Store, and then we leased it back to them. So I've been in the rent-own, lease-own, lower credit score space for 35 plus years. I sold my interest out in UOWN in 2017 and started a company, Capital Concierge, where I help businesses with business capital. But more importantly, I also went to work for one of my competitors in the lease-own space and started doing lease-own HVAC and hot water heater, and started to learn a lot about the HVAC space. I didn't even know how to spell HVAC when I first got to that industry.
Don't feel bad. Tersh still can't spell it.
I struggle. Which one are capitalized? I don't know.
It's a C.
So from there, basically worked for a company that was a competitor of mine, and met Air Around the Clock. Air Around the Clock is based out of Sunrise, Florida, which is West Fort Lauderdale. They're the largest Rheem dealer and the largest American Standard dealer for two brands in the United States. 186 employees, 140 trucks on the road. They do plumbing and HVAC. And so I was doing the lease-own with them. And then at some point I decided to leave that company. I told them, like, okay, guys, thank you for all the business, but I'm moving on. They go, well, wait a second. We'd like to talk to you about taking a position with us as director of finance for Air Around the Clock. So I did that back in early 2021. And so at that point, Air Around the Clock had Wells and Synchrony, two major prime lenders. Okay. But in other words, in South Florida, you've got the haves and the somewhat of the have-nots, right? So you've got the 850 FICO score people, and you've got the ones that have not so stellar credit. So I started bringing on additional lenders that could, our mission is to, we get a customer, you pay for the acquisition cost to get that lead, you roll the truck out there, you have the technician sitting at the kitchen table. Mrs. Jones, you need a new system, yours 14 years old. Okay, how much is that? $10,000. $10,000? I don't have $10,000. It's like, okay, well, we offer financing. We have everything from great credit to not so great credit and everything in between. So at that point, the technician turns that lead over to the finance department, which is myself and the team. And then one of the things that we do is we pull a soft credit pull on the customer. So with their consent, we see where they're at, then we know where to guide that, which are they a prime or second look lender or tertiary lender, what have you like that. So from that standpoint, that's what we're doing for Air Around the Clock. About 2 years ago, the general manager and the primary owner of Air Around the Clock and myself started IHCS Finance, which stands for In-Home Comfort Solutions. And so we saw a need in the marketplace where, technicians are great at fixing HVAC systems. They're great at repairing or replacing, whatever the case may be is. But as the world of finance has gotten more complicated with the increase of the federal prime rate and some things like that, if you're an 850 FICO score, it gets you done in 7 minutes. But in other words, as we go down in that FICO score, approximately 40% of the U.S. population has some sort of credit challenges about them, right? So when you're an HVAC owner out there and you've gone through the expense to roll that truck, you're sitting at the kitchen table and the customer requires financing, the last thing you want to do is get a turn down. So what we've done is at IHCS Finance, we act like a back office finance department. I relate us to like a payroll company. So if you're a small HVAC company, you probably are using Paychex or ADP or one of these ones to do your payroll because they're the experts in the payroll. They're going to keep you out of trouble. So I relate IHCS to that. So we have two programs. We have one that's a concierge program that literally the technician can be sitting at the kitchen table talking to Jane Doe, and Jane Doe says she needs financing. The tech can call us on the phone or text us in an application link into our CRM. We'll reach out to that customer, and if it's Jim's AC, we contact Jane Doe and say, hi, Jane Doe, my name's Tom at Jim's AC Finance Department, and we're here to get you financed. And so
you act as the company that you represent,
right?
And you close the deal, so you're able to help that deal get closed.
Our mission is to be that back office finance department, call us a loan processor, whatever. But our expertise is knowing the industry and knowing which lenders are available for what FICO scores. Is this customer the homeowner, or are they not a homeowner? Is it a mobile home on leased land? Do they have some bankruptcies in their past? So all of these are parts of the puzzle that we qualify the customer, that we're going to find the best fit for the customer and close that deal for the dealer. We're the back office finance department for that contractor. So that's our concierge program. They can literally call us. Hey, call Jane Doe. Here's her phone number, name, address, telephone number, email address, brand, to see her ton and price. So with that information, we're again calling them. Hi, this is Tom from Jim's AC. We're here to take care of you today. We also offer a thing that we call IDAP, Instant Decision Application Process, which is a tablet version of this, basically the same thing. We have some different lenders on our IDAP, Instant Decision Application Process, but the theory is you at the kitchen table, the technician puts the application in their phone or their tablet. It pulls a salt pull and hopefully we'll get an approval. Talking a little bit about the industry, the finance industry, right at the moment, with the prime rate being at 8.5. If you're a Wells Fargo or a Synchrony Bank, you've got deposit money, and so you've got a lower cost of capital. But if you're another lender, which I won't mention any names now, that has to borrow money, then the cost of capital is getting pretty expensive. Also, what's happening is that credit card debt is at an all-time high. Savings accounts is at an all-time low. And so things are really tight right now, even though we have a low unemployment rate, inflation and everything else bakes into that. And so the lenders are all risk adverse. And so what happens is the prime lenders that used to buy down to say a 630 or 640 now are moving their FICO floor up. So now they're stopping at 700, which then creates a big space in the second look space, right? And they were typically a 650 to 550 FICO score. And so now they're wanting to move up their FICO floor and cover from like the 680s to the barely 600s. And as it goes down in FICO score to the customer, usually the prime or the interest rate goes up, the term goes down, and maybe the lender fees to the dealer goes up, right? So the challenge is, there's lenders out there that'll buy down to a 550 FICO score and charge the dealer contractor 25% lender fee. If you got a $10,000 HVAC job, you don't have
That's a lot of money
baked into that thing to be able to do it, and it's illegal to charge for financing. You can't give the guy a price $10,000, realize that he's got bad credit, and then come back and go, well, I messed up on the price. Now it's $12,500. It's illegal to do that. So, but what we do is, again, we have lenders, and our expertise is to find the best possible finance option for the customer at the best or least, I guess is the best way to say it, lender fee for the dealer. And then we have prime lenders, and then we have super prime lenders that are really great for that super 700 and 750 plus FICO scores that have all kinds of, no interest, no payments and deferred payments and all the different things like that. But as it goes down a FICO score, it gets a little more challenging. So we have super prime, we have prime, we have near prime, subprime, and shitty credit, I guess. Excuse my French. But so we have these bands that we can help with them. And again, our mission is to get the best rate for the customer at the lowest monthly payment. We have lease to own, which is for that customer that has really, really bad credit, but they make good money. And I'm sorry, sir.
No, I was going to ask you, because you mentioned lease to own earlier. I was kind of waiting until we got to a certain point, because my understanding, Canada's huge with this on the water heater space. Like that's pretty much that the whole space is lease to own, from what I understand. And I know that there's always been talk of this in the US. It just doesn't feel like it's ever been able to really catch on where like it's a bigger thing, unless maybe it's just the people that do it are so quiet about it because they don't want anyone to know. But what are you seeing when it comes to the lease to own side of things? Are people, contractors specifically, getting on board with that? Are they starting to open their mind to like, is something changing there? What are you seeing?
Well, in Canada, they do a lot of rent to rent. In other words, the unit as a service. So in other words, it's like, I want a new AC and a new hot water heater. Like, okay, that's going to be $150 a month. There is no ownership.
It's almost like added into their mortgage, kind of, isn't it? Like it's just almost like tax. If you pay your pet taxes monthly, it's just part of your mortgage.
It's like your internet charge or your cable charge. It's just a monthly charge. But in other words, and if something happens to that, they repair it or whatever. That's usually what I call a rent-to-rent type situation. In the lower credit, and usually that's a better customer. And like Service Experts has their expert lease program that basically that's usually for a higher credit score as well, probably 650.
Oh, really? Okay.
And basically it's a service that they're providing that says you've got a fixed price for this AC no matter what. If it breaks, we're going to fix it. If it's too old, then we're going to replace it. In the core lease to own for the credit challenge customers, it's not inexpensive to begin with, but typically it's the customer will pay approximately double. If it's a $10,000 deal, they'll typically double it as the value of lease agreement to like 20 grand, and then divide it by say 48 months. So the payments are expensive, but one of the things that if at Air Around the Clock, they have a saying, your wife is hot, you better get your AC fixed. So in other words, in the world of, if you have no other option, and let's say that lease to own payments, $364 a month, but if that's your only option and that's what you need to get your house cold, especially in high heat areas like Florida, Arizona, things like that, it's an option. It's a payment option. And one of the things that
Tom, what's the chances of them defaulting on a loan like that? Because they're already at risk.
They don't own the equipment. So if they don't pay, the equipment is actually the dealer's, right?
In the lease to own transaction, the way it works is that Jane Doe gets approved for an $8,000 system. The leasing company is buying that equipment from the HVAC dealer, so that's their HVAC system. So the threat of is always better than the actual act of, meaning that I've been in the lease to own space for a long time, is that Mrs. Jones, that's our air conditioner that's cooling your house right now. If we can't work something out on the payment, then we're going to have to make arrangements. So it's always the threat of, or whatever the case may be, is the lease to own company doesn't want the AC back because they'll lose the tail feather on pulling it out and trying to sell it for whatever. But they're experts at they're providing a service that incorporates a product. They're in the cash management business. So they're working and they, because of the fees they get, it's not capped on an APR like an installment or revolving sales contract. So their effective APR could be 100%, right, over the life of the period. But they're dealing with a credit challenge customer. I have one lease to own company that'll go out 96 months on a lease to own credit challenge customer, and has really affordable monthly payments. So we have a lot of tools in our toolbox to help contractors with their financing, and that's our expertise. We're the payroll company for the finance, if you will. We're the expert in that, and we charge a reasonable fee for and it's a success-based fee. So in other words, we charge anywhere from 2.5% to 2.9% of the financed amount. But if you give me a customer and I can't get the customer approved, you pay me nothing. If I get the customer approved and I get them approved on a lease to own and it's $396 a month, and they say that's more than my IKEA payment and my mobile home payment put together, I can't afford that. Okay. And the customer says no, then the dealer pays me nothing. It's a success-based fee. I get the customer approved, the dealer does the install. They send us the completion certificate information. We get that done. We handle all that for them. We're managing the whole process. And at that point, on a $10,000 deal, if it's 2.5%, then we make $250. Okay, which is not a lot of money.
That seems like low.
Well, I understand. I think the same thing. But biggest thing, it's important to know that people buy payments, right? So that's
100% accurate.
That strategy is that we are looking to get the best possible payment finance option for the customer at the lowest lender fee for the dealers. And
I would say people buy payments if they don't have good credit. If they have good credit, they buy 0% interest. Well, typically, because they want to use other people's money without the fees. Like example, like I could have, when I got my truck, this is like the first new vehicle I bought in a long time. They had it's on Brittany's credit. She's got like an 800 FICO score or something like that. So we got 0% for 36 months. So the payment's quite a bit higher than you would normally have for a truck, but it was like, well, 0%. So, and plus we have businesses and stuff like that. So we can, you can put some of those payments through the business and everything.
Right.
But if back when I was an employee and working and not making a lot of money, I would have definitely gone like the 7-year plan of like $200 a month if I wanted the same vehicle. So I can see where both are used, just depending on what the customer wants.
And like we have a pretty substantial FICO score in South Florida and on our average, but so we do a lot of 12-month, 18 months, no interest. We do things like 48 months, no interest, 60 months, no interest, but those are fees involved. So we have to have that baked into the price before we go printing it. And what I tell dealers is like, look, don't be surprised if you roll up to a very nice house. It's got the grass is cut nice, 2 nice cars in the driveway.
They have no money.
Don't assume they've got perfect credit, right? So if you go in there and you go, okay, I need $10,000, put 10% on top of it and say your price is $11,000, Mr. Jones. How do you plan on paying for it? Well, I'm going to write you a check. Mr. Jones, I like you. I'm going to give you a 10% discount. But if they start saying they want financing and they're talking about, there is no free interest. So on those 12 months, no interest or
they're paying a dealer fee.
Interest, the dealer's paying that buy down. So go in there loaded, and then if they're going to say give you a credit card, say I'm going to give you a 7% discount. So that covers your 3% credit card transaction fee. So what we do at IHCS is not only help them with their financing, but we try to spend time with their sales techs and help them best navigate and understand the finance world. Because when they go in there and proverbially drop their pants on the price and give them the net, and then realize that there's a 10% lender fee, and they go, shoot, I can't afford that. I'm at the bare bones on my margins right now. And you can't go back and now what we've had dealers do, go, you know what, that train model 1, 2, 3 is not in stock. I need to give you the 4, 5, 6, and that's a little bit higher pricer, or there's some things that you can do, or change brands or whatever the case may be is, but you can't give them one cash price and then go roll up on that. The Attorney General kind of frowns on that. So, but we're here to help contractors. Now,
Tom, you can't do that with financing. You can do that with credit cards?
You mean raise the price? Now on credit cards, there's a way that you can do reverse charges where if it's a $10,000 deal, they're going to give you a credit card. You can do reverse charges on that. That's
meaning.
Cool. So meaning like there's a 3% charge for using your credit card, and so now it's 10,000 plus 3%. So I got to charge you an extra 300, to use the credit card.
I feel like there's been a big push on that on the digital space, like MySpace and some of the vendors that I use. I almost just expect it. Like, okay, it's a fee, but I use the card because I get miles, I get points, I get, all that stuff. It's like, well, okay, you have to pay the extra. I get it with points, so it's not a big deal. But I think that's a lot of, because I see this a lot in Facebook groups. People will say something. They're like, oh, how do we get the fees down? How do we get the fees down? People are like, well, just bake it in your price. And a lot of people, it is they don't know how to sell. So raising their price scares the crap out of them. I was at the first 2 HVAC companies I was at, I always try to get the price lower because for me, I didn't understand the value component of that yet until I got some good training in the coaching group that Tersh and I were both a part of. But I see contractors at some point, I feel like they're going to add that. There's probably some that are already doing it, adding that credit card fee to the bill so they don't have to foot that. Because to be frank, yes, you can raise your price, but then your price looks higher compared to what a customer is thinking. That's just my thought. But
as a consumer, though, I feel like it's a bait and switch.
No.
That's the way I feel, because I get quoted $5,000 for an event space. We did this in January, and then when I went to go pay them, they were like, "Oh, it's 3% on top of it," and you're like, "Well, then why did you quote me $5,000?"
That should be correct. So that should be something that's like 5,000 plus applicable credit card fees. Say it so that way it's like, okay, because otherwise there's been times when someone says that to me and I'm like, I'll just do ACH because I don't want to pay the fee. for whatever reason. But it all that stuff has to be clear. So, if you're listening to this, don't be shady. If you're going to try to pass the credit card fees on, be like, well, it's $300 for your repair today. Okay, thanks. I'm going to sign up for that. And then, oh yeah, by the way, you got to pay 3.5% for your Amex card.
Yeah. I'm glad you brought up credit cards, because what we've seen in the past is that you go to a customer and they're like, okay, well, the job's $9,225, and then he says, okay, put $2,000 on this card, put $1,400 on this card, and then all of a sudden, all of their available credit is gone, and so they can't take little Betty to Chuck E. Cheese now because they have no credit card, availability or whatever the case may be. So, financing is meant to be able to take a large purchase and make it affordable. Again, the biggest thing is people buy payments. There's no doubt about that. And it's like, the car loan, when you go into the car, it's like, the car salesman, how much can you afford? $300 a month. And the salesman says, if I can get you in this car for $300 a month, will you buy it? And the guy goes, well, absolutely. I can afford $300 a month. He didn't say if it was 48 months, 60 months, 72 months, 96 months, 105, the term was not disclosed until they get into the finance, And when you talk about a car lot situation, the salesman sells the deal and turns you over to the finance manager. We're that finance manager for the HVAC contractor.
That's probably even a better analogy that people can understand, because we've all been through that. Like, and honestly, that's why I hate going to the dealerships and buying a car, because I'm there for like 4 freaking hours.
I refuse to go to the dealership.
Brittany does all that for me. Does Julie do that for you?
Hell no.
Or you just buy it
they
online?
come to the house. Like because the finance manager
fancy.
is the salesperson. Like you go in there and spend another $8,000-$10,000 once you've gotten in there with the finance manager, because they're going to say,
Tersh, let me ask you a question. Do you buy the care package that they always sell with it? Like the finance manager asks, well, do you want this extra care warranty thing?
Mm-hmm. Yeah, no. There's tricks to that, and we can talk about that in a different episode. But there's definitely, like, they know what your limit is, and so they're going to offer you all the care packages to reach that limit, and then tell you, oh, your financing rate can drop if you get this package included. Like, nah, you're foolish.
One of the things that I wanted to mention before we get going is that we also do more than just the financing thing. We work with different partners that offer marketing. We're actually a manufacturer's rep for JB Warranties, and so we can help contractors get in the space. Air Around the Clock makes huge money with their service contracts, and then we can not only help sell those to those, but also when customer comes in and we're doing the financing, is like, okay, well, your payment's going to be $125 a month, but for only another $17 a month, I can cover the full labor for that system, where you don't have a thing to worry about for 10 solid years. It's only $17 a month. Wouldn't that be worth it, Mrs. Jones? So, we have accounting firms that are an accounting firm we work with. We also do commercial financing, which is really big, because if you go to a laundromat, you got the HVAC contractor has a buddy that owns a laundromat, but it's a commercial address. We can't use consumer financing on those commercial addresses. So we have commercial finance lenders that we can get those deals done on the business on a commercial address. So we want to provide service. We want to be just more than just a back office finance department, and we want to help that contractor grow his business. And we've taken smaller contractors that are a couple of trucks and help them over time, because they're closing more deals and getting more customers financed, help them grow their business and help them grow their top line revenue.
That's such interesting timing to have this conversation, because interest rates have not been this high in quite
25
a long time.
years.
Yeah, we've had a really good run. And a lot of us right around Tersh's, and Tersh is older, just so everybody knows, but around our age, that we haven't been through this as adults yet, where we've had to really focus like on the credit challenges and stuff like that. It's been fairly good since 08-ish, right? But I think having these other options, because we won't say names, but we have some mutual clients of Tom's, and they don't mind going to trailer homes for jobs. They don't mind going to places where most HVAC contractors are like, nah, I'm not going to go there because they're going to get turned down and they can't afford it. But now it opens up other opportunities. And then it almost creates a niche for them. This person I'm thinking of, we created a page on their website for bad credit HVAC financing. So that way they show up on Google when they have that, because nobody else is going to have something like that on their website because nobody wants to deal with it. And it actually gives them a competitive edge in their market versus just, like some of the ones that we know of, it's, 650 and up. And that's not a lot of people anymore. A lot of people's credit scores have dropped over the last couple of years.
And basically putting that on their website, I know you're speaking of, which I'm very close to, the option of having a customer when they're not going to call up a contractor and say, hi, my air conditioner's broken. I've got shitty credit. Can you help me?
Right.
Or, when you go into the home and you're sitting at the kitchen table and it's like, okay, well, it's $10,000. And the guy's like, or man or woman says, okay, I need to speak to my husband or my wife when he gets home. Usually that means you didn't give them something they can say yes to. If you tell them like, look, I know this is $10,000 and, we offer financing, and we offer financing from everything from great credit to not so great credit and everything in between. And, talking to a customer about that, they're not going to embarrass themselves to say, hey, I got most of them. Some will, but especially like in 2008, when the housing crash came through, a guy that was a 775 FICO score all of a sudden became a 502 because of the housing, foreclosure or whatever the case may be is. He's not used to being credit challenged. Okay. So
and that's embarrassing.
It's embarrassing.
Nobody, right. Well, that's why
you felt like you've done all the right things and you've paid your bills and you've done all this stuff. And then all of a sudden the housing crisis comes through and you have a loan, you have a mortgage with the same bank that you have a checking account with. And you might have had $500,000 inside of your checking account. Well, the bank just took that money and paid your mortgage with, and whatever's left over, like all of a sudden your cash flow's gone. And now you're like, what the crap is going on here? I didn't expect this to happen. Now your credit just is shot, and you've spent your whole life doing this, like by the book, doing the right things. And now you have to have a conversation with someone and say, hey, look, my credit's not good, but this house needs to have air conditioning put in it. And so it's a awkward conversation. It's one that most people don't want to have with the guy that's here just working on my air conditioning.
And the thing about it is, because of our background and the training that we have for our team and what have you, is that when that, like, we have contractors that literally they go to the house, sell the job, and then they turn the customer right over to me before or IHCS before even asking them about credit. So in other words, I'm better geared at having that talk off with them by starting out and saying, we'd like to pull a soft credit pull on you with your consent. It doesn't affect your score. Please say your first and last name and indicate yes. So we record all of our calls for compliance. And from that standpoint, now it's a mano a mano. I'm talking to the guy. They're not standing in front of a technician and be embarrassed when they're telling them they've got not so great credit. So, and we know how to have that talk off and say, look, I got you. Okay. Let me help you, but I'm going to need to ask some questions. Do you own the home? Do you have any bankruptcies? What's your credit score like? But now we're peeling that onion back to then go, okay, I see where you're at. I'm going to take you to this lender. I feel like we're not going to send a 850 FICO score to a lease to own company, because that's not going to work. And we're not going to send a 350 or 450 FICO score to a prime lender that's going to offer them 7.99% interest rate for 144 months. We're directing traffic, if you will. We're traffic cops, as I like to say, but we're using our expertise to know before you go. We even have a program that we can offer contractors that if they send me like an Excel file of all their 10 calls tomorrow, I can literally do a soft pull. I can grade that customer A, B, C, D, or E. And basically when they go to that customer's home, if they see an A or B, they can indoor air quality, and we need to do duct cleaning, because we know that we can get that customer anything they want finance wise. They get into B or C, And a D, maybe they're going to give them a better price oriented deal, because maybe it turns into a lease to own, and the higher price they can't afford those higher SEER systems and duct cleaning and indoor air quality and all that stuff. So we have a thing that we actually call Know Before You Go, that we can help contractors with that, and we're working on automating that for POS systems and stuff. So
how are you finding? So I think that's one thing. Like, I know I've thought about it many times when I was in the trades, and I'm sure Tersh, you have too. Like, it would be lovely to know before you go to the house, but like how to bring that up in a conversation so it's not like, hey, I know.
Oh, by the way, we already know.
I know they can spend 30.
I can answer that, because it's called a pre-qualification, and I've got a full script that I can set up a dealer on, and the dealer knocks on the door and starts the conversation after they've reviewed the system. Okay, then you need a new 2.5 ton heat pump, hurricane pad, line set, thermostat. It's going to be $8,000 or $10,000. By the way, Mrs. Jones, we pre-qualified you through our process, where we actually have a little bit of an insight on what your credit looks like. And if you would like, you can opt out of that, where you don't have to. You can opt out, and here's the phone numbers that you can do to opt out. But you tell them, you read this script and says, we have pre-screened you, and we have an idea that we feel like we can get you XYZ. We feel like we can get you an APR of this, or we feel like that we can get you certainly pre-qualified because we pre-screened you. And if they go, well, why'd you do that? I don't want that anymore. Then they can opt out, and then you're go. So and when you start talking about people's FICO scores and credit histories, you got to follow the rule book. You have to do it step by step by step by step. So we have that figured out already.
Now, with the lease to own, like once you get into the lower credit scores situations, do they cap can you not install certain things? Like, does it have to be like the bare bones basic Goodman or something like that?
Great question. On lease to own, it has to be either a full system, like let's talk about a split system, or you can do a condenser or an air handler or the full unit or a hot water heater. It has to be a serialized item. I've got one lease to own company that'll go up to $15,000 is the max that they'll go. But that one's a 48 month. I've got another one that goes up to only 12,000, but they'll go out 96 months. Now, the other one will actually can do repairs on a lease to own as long as it's a serialized item. So if it's a compressor, if it's a coil, if it's a fan, anything that's substantial that has a model and serial number that they can do repairs on lease to own. Now you can't do electrical panel on lease to own. You can't do plumbing like a repipe job or something like that. But
yeah, there's no serial numbers on that.
It needs to be an asset that could potentially be recovered. That's the kind of the test on the lease to own.
That makes sense. Yeah, something that they can take away. So essentially, that's like if we're talking about more than just HVAC, plumbing would be like water heaters. I'm assuming is a big one.
Water heaters.
Is there anything that you guys in like other spaces, like you see in electrical, like EV chargers of course, someone's probably not hiring you for an EV charger if they need money.
Well, we do roofing, generators, water filtrations, basically home improvements, anything like that. And again, there's typically different lenders, and certain states have this lender, and so that's what we try to do is cover all the bases. We're certainly well equipped in the HVAC and plumbing side because that's kind of the back history of Air Around the Clock. But our mission at some point is to be able to finance anything where there's a consumer finance option going on, but we're not there yet. That's on the whiteboard, but certainly home improvement is where we're at. Windows, doors, roofing, installation, things like that.
That's cool. That's exciting.
But we're, biggest thing is that it doesn't cost anything to sign up with us. We'd love to, any of your audience would like to reach out to us at IHCSfinance.com or tmurphy@IHCSfinance.com is my email address. We're here to help. And, your success, the contractor success is our success, because we only make money when that customer when that customer gets approved, then that dealer does the install. So we're in it to win it with them.
Very
I
cool.
like that. I love having the back end finance, because like training technicians on how to talk about money, even myself, because I would have to handle some of that stuff in the office. I don't want to talk about someone's credit score. Like, that's not what I signed up for. It's awkward as hell. I don't even like talking to other people about my credit score. So that's awesome. So you guys kind of package that, not only the actual thing we get, the financing, the lease to own, but the service of dealing with the conversation of the money, I think is a very unique spin. And I know the mutual friends that we have that they couldn't speak any more highly of you and what you guys have done for their business. And I think hopefully, I don't know if you had, before we start heading out here, do you have any insight? I mean, I know you can never predict anything in the future, but just based on your history in the finance world, any projections or things that you would like to think are going to see over the second half of 2024 heading into 2025? Because we got election year, which sucks because it's freaking ads everywhere, but there's a lot of stuff with that. I don't know if you have any insights or projections.
Well, I talk to, obviously I'm talking to an awful lot of lenders, and the lenders are somewhat hopefully optimistic, but extremely cautious, right? Mitigating risk is their number one job, because obviously if they write a bunch of bad loans, that erodes their profitability and return on investment and things like that. If you listen to, all the things that I stay in touch with, I mean, they were originally predicting 3 ratchet downs in the prime, which would make a huge difference in the lending space. It looks like, based on what I saw from the feds, that they're hopefully optimistic of doing one rate reduction. And I don't know if that's going to be 25 bips or 50 bips. In other words, a quarter point or a half point or what have you. So I'm expecting, but they're expecting the inflation and all the different things to recover pretty solidly in 2025. But everyone's remaining optimistic. But I would say, and I'm no economist, but that we're going to be pretty much status quo
for the rest of this year.
Yeah, at least up until election time, because maybe the current administration may force a rate reduction. That
was kind of my thought, was like, it's just like gas prices. They always seem to go down before an election. I don't know why that is.
Funny how that works.
Like, it's funny. It's just like, then it's like lasting on the mind to try to catch any swing voters or something. Well, that's a whole nother discussion though.
But the good news is that IHCS provides a financing solution that we're staying on top of that, but we're advising the contractors and giving them a rate sheets of like what to expect. We asked them what their max lender fee discount's going to be all in before calling them. Sometimes we call them and say their max lender fee is 7%, and we call them like, I've got Jane Doe approved, but it's 11%. And they're like, okay, on this one I can do the margin. So we're constantly in communication with our dealers, and we work for them, right? I tell all of my dealers is like, look, we work for you. That's what we do. We're here to support you. Without you, I have no reason to be here.
Yeah, I think an important point, and this can't get stated enough. I think sometimes, like Tersh and I, we just assume people have had business coaching and understand that they have to build finance fees into all of their prices, not just the big ticket. You have to build it into everything, so that way you don't run the risk of, even on repairs. Because honestly, in today's world, you might need to finance repairs over $500 or something. Like, you need to have options, because otherwise, again, you're just wasting time. You already paid for the lead, technician's time, drive time, wrench time, and like you put all this time in. You got to get the sale. You got to close and convert to pay back all of the stuff that you've already paid for. Otherwise, you are losing your ass on these service calls when you walk away with nothing because a customer can't pay $750 for a fan motor or whatever the repair is.
Just when we went through COVID and cars were hard to get, people were fixing up their cars and keeping them longer, right? But now with an HVAC, I mean, with copper and 410 and all the different things that go into an HVAC, the prices continually to go up. And so what we're seeing is we're starting to see a pretty significant amount of repair financing, because customers like, yeah, I know it's 9 years old, but I'd rather pay the $2,000 now to do the pull and clean on the coil than replace it for $10,000. But can I get that financed? And so we actually do a fairly significant amount of repairs financing for those customers, and typically, obviously, are more in the credit challenge space on those repairs than somebody that's an 850 FICO score that's making a couple $100,000 a year. So,
well, the people with 850, they don't have massive credit card debt. So they have room. They can put it on the black card or the platinum card or the whatever card that they got available. Like Tersh, he's got all the cards.
Nice.
I collect them. I'm a card collector.
Tom, this was great. It was good for me to finally meet you. I've heard really great things, both from Tersh. So most of the time, I don't believe what he says about anybody.
Yeah.
But I did hear from a third party source that you're a stand up dude. So it's great to have you on here. It's great to hear your experience too, because I think sometimes contractors get hit with a lot of finance options because there's in the group, well, you got to go with this company or this one or this. It's like, this is the hot one this year, or this is the next hot one. But you guys have actually done this for a very large HVAC company, kind of built the model around that, which I think really, I think that gives you guys a leg up, in my opinion, as far as what you're able to offer, because you understand the challenges, because your business partners still have a big HVAC company.
I'm in the HVAC business. In other words, for a very large, I couldn't fix an AC for $1 million, not because I don't want to, I don't know how to, but that's not my job. I'm the finance guy. We have technicians on the road that are the masters at that, fix and replace and repair and all that. So let me be the master. Let me be the expert for your HVAC contracting company, and let's help you grow your business. I should be able to, and I preface this, if you listen to me, I'm talking to the contractors out there, and let me help advise you and how to price things a little bit, not get too much into your business, but with my ability to do what we can do at IHCS Finance, we can help a contractor grow, and we should be able to give them a fairly substantial 10, 15, 20% lift in top line sales, because think how many turn downs that you get in there. If we could just convert half of all the turn downs that a contractor does, that would be a huge lift in top line revenue. Agreed?
Mm-hmm.
Oh yeah, 100%.
So we're here to help, and we work very hard for our dealers to get things done for them and get their customers approved. Turn around experts. That's what we call ourselves.
I love it.
Appreciate you, Thomas.
Thank you very much for your time, fellas. I really
Absolutely.
appreciate
Thank you.
Thanks for being on today.
Yep. If anybody has any questions, don't hesitate. We'll put Thomas's information in the show notes, but if you have any questions, don't hesitate to reach out to him or Josh or myself. Don't ask me finance questions. I will not know the answer to them. And I will just send you to Thomas anyways. So, but with that being said, I hope you have a wonderful and safe week until we talk again next time on Service Business Mastery Podcast. We'll see you later.
See you.
Thank you for listening to this episode of Service Business Mastery. Now that you are equipped with essential business advice from this impactful conversation, you are one step closer to becoming the successful owner of your dreams. If this episode has been helpful to your business journey, don't forget to subscribe to the show, leave a rating, and share it with other owners as well. Visit servicebusinessmastery.com to learn more.